about that, the bond market implication. So, so the investors will drop the confidence. Like I said, investors and businesses prefer to know things. They don't like uncertainty. So the confidence, definitely this one has had a significant impact on investor confidence. And so this one, you might see a bond yield rising as a result of this. So because these tariffs have raised the economic uncertainty, especially around the inflation, growth, and trade stability. So when the investors when they fear that there's going to be a higher inflation or fiscal instability, they usually demand a higher return to buy the US government bonds. So because they demand a higher, you know, return on those bonds, to buy the bonds, to buy the debt that America has. So then that will cause the bond prices to fall and the yields to rise. So the bond prices and the yields, they have inverse relationship. When one rises, the other one falls. So they don't go together. So they have an inverse relationship. So when the bond price fall, the yields to rise. So this, you see that in the chart being inversely to the bond prices. It would be a problem when we have yields rising, like that means the return on investment. So rising yields actually equal higher borrowing cost for the US government and also for consumers. They have to pay high amount of interest for the government debt, and that also will impact debt on everything, debt on credit card, debt on house, home loan, everything that is, any debt, because US is a debt economy. So that will actually really significantly cost the US government, and that is not sustainable over a long term. So another thing that you also have to pay attention to this when we talk about this bond market. So dumping of US treasuries, especially by China, also it's very problematic. But we know that the result of